Academic Award in 2019 by Indian Commerce Association. I welcome you, sir, on this virtual forum. May I now request Dr. Professor Kalpataru Bandopadhyay, sir, to share his intense experience with our participant. Over to you, sir.
Okay, hello.
Sir, you are audible, but you are not visible.
Oh, sure. Okay. So
Yes,
thank
sir.
you very much, madam, for your kind introduction. And let me convey my heartfelt thanks to the organizing committee of Amity University, all the faculty, respected faculty members of the Amity University, and also most specially Dr. Kia Das Ghosh, who in fact contacted me to and give this opportunity to speak on this issue of corporate governance. So I also uh, convey my greetings to all the dignitaries, participants. Some of them are faculties and also maybe scholars. Okay. So let me, without wasting time, so let me start my discussion. So my discussion is really was previously. Oh, one information is there regarding presently I am not head. Okay. So presently that is they are mentioned and it was introduced. So this is a old record. So that is one original. And another thing is that initially I told ma'am that I will be discussing about the corporate governance and financial strategy. So then I have changed and modified little. So it's now corporate governance and financial decisions. So in fact, I wanted to put, okay, so because I want to handle this one. Okay. So is it possible? Well, and I wanted to present.
Yes, sir, no problem, because you are a presenter now, so you can change your slides. No issue.
Okay, sure. Okay, I can change this time, is it?
Actually,
So
ma'am,
you can
I'm just operating the slides actually.
So no, because sir wants
I
to handle, so you can
Yes, yes. I need to
close
do
your
that.
screen.
Yes,
I
yes.
can close my screen. Okay.
Yes, yes, please do that.
Yes.
Okay.
So is it visible? My slide is?
No, sir. No, no.
It's not, no? Okay, just a minute. Okay. I think,
Yes, sir. Now it is visible.
okay, fine. Thank you. So my discussion is on this corporate governance and financial decisions. So instead of traditional way of discussing, so I have framed in a little different way. So without going into the definitions about the corporate governance and all the introductory discussions, so let me tell about just important functions of corporate finance and also the pillars of the corporate governance. So here, the corporate finance, all you know, that is capital structure decision, dividend decision, investment decisions, and working capital management. Whereas there are many variables of corporate governance. However, here we have considered that board composition, independence of the board, that is how many independent directors are there in the board, then institutional holding within the board member or within the shareholders, and the size of the board. And again, the CEO duality, where the CEO, managing director, chairman, all do the same, or they may be three different persons. And there is compensation policy. This is remuneration of the topmost managers, uh, uh, those who decides their own remunerations. So now, let me put my discussion like this. So important. In fact, what is happening here? So we can, if we take one issue like capital structure decisions, okay, we can look at the impact of board composition, CEO duality, and compensation policy. Similarly, so dividend decisions, we can take all these issues of corporate governance. So all these factors or variables of corporate governance, they are related some way or other, directly or indirectly, with the different functions of this corporate finance. So here, basically, in this presentation, I'll be discussing about the capital structure decisions. And this is impact of corporate governance on capital structure decisions. So my discussion will be having four parts. First, this is background, some highlights of state of corporate governance. Okay. Some preliminary words. Then empirical evidence. So three empirical evidence I wanted to show you. One is high indebted companies, okay, which bears huge financial risk. Another is an infamous acquisition in India, okay, that is also hugely related to financial risk. And all these instances are related to capital structure. And again, financial risk of 2008, this is not purely financial risk, this is total risk, I can say, which where the business risk was the uh, primary source of risk. And there will be discussion and comments and then suggestions. So first, let me discuss about the background. So what is the state of corporate governance? Some highlights. So weakness in corporate governance are often associated with proof of quality of financial reporting, earning manipulation, and overt financial statement fraud. So there are several literatures on this. I have mentioned only three. So Cohen 2002 observed that the audit committee, who are supposed to examine the financial affairs, particularly audit committees, are ineffective to a strong instrument to ensure governance. And Krishnan 2001 identified problems in association between quality of corporate governance and incidence of internal control. And in auditing, there is a very important part. This is internal control. It is not only the managing things in the finance department, it is managing things in other departments also. The job of internal control is to put a good check over the financial transaction, regularities, etc. So with this, so let me show this slide. This is as on 2021. There are some companies I have picked up, and these are picked up where debt equity at present, which is showing here in the last column. Okay, so this last column, this is debt equity. So this debt equity where it is more than 4, I have used this cleaner.in website, and I have given the condition that debt equity should be more than 4, and all these debt equity is more than the industry average of their particular industry. And here you can see that the amount of debt they are assuming. So this is Indigo, Interglobal Aviation. So in 2018, the debt was 2,254 crore. Okay. So from here, it has shot up to 29,859. And you can see the name of the Vodafone is also there. We know that it is a highly indebted company at present. Here we have, you can see the Inox laser. Okay, but what we can see from here, that this debt equity ratio, so this is as high as 269. So even if we leave this one, Then there is 153, again 19, 28. So huge deep these companies are assuming. Okay, and what is the result here? I have not taken only this year's return on capital employed or return on capital equity, because due to COVID period, several companies might have affected. So I have taken the average of 3 years. Okay, and here you can see that most of the companies, they were positive as far as their return is concerned, return on capital employed. But after deducting the interest, they became the negative. So it is hugely negative. So 23% for Super Stop, it is 23%. Okay, return on negative. This is CAGR ratio. So now we can understand that the huge amount of, or we can say that reckless debt financing this company are uh, are resorting to. So there may be some there may be some business sense or may not be have business sense. I'm not going there, but what I'm wanting to tell, that we are very much aware about the NPA of different companies. From where these companies are getting loans, they are getting loan from financial institutions. So if you take the case of India, so this is basically the Indian banks. Okay, and there may be GIC or some LIC or some financial institution are also there. Maybe some private institution are also there. But mostly they are taken from Indian banks. So what is happening here? So the these are the bad debt position in last pre-COVID years. I have deliberately removed the COVID period up to 2019. That means 31st March 2019. So here you can see the government has to write off 1,72,000 crore. Okay, and it has recovered only 18,820 crores. And if we add with this figure, what is the present NPA level or bad loan as per the RBI data, it is much more than 10 lakh crore rupees. 10 lakh crore rupees, and it is increasing year after year. And out of that, we are writing off more than 1 lakh crore. So these are certainly related. So here both parties are there. One is the companies are taking loan, and another thing is that financial institutions, okay, maybe some business or others, they are also allowing loan. Then otherwise, how from this 2,254, how this Indigo could get this one, or you can take some other company. Okay, so suppose Super Stock from 125, it is getting this much of amount. So debt capital. So now another source of financing is that the debenture capital is also there, or corporate deposit is also there. But a huge amount is institutional lending from the different financial institution, mostly the banks. Now, how this is possible? How the or uh, who is responsible for this one? Okay, certainly the company is responsible. Then within the company, who is responsible? It is board of directors. Finally, they are taking the decisions that will be coming after discussing this case. So now let us take the scenario of financial risk from the viewpoint of an infamous acquisition in India. So this is Kingfisher Airlines and Air Deccan acquisition in 2007-8, and purchase consideration was 550 crore for 26% stake of the Deccan Aviation, and then another 20 crore with a sum of 418. So now the question is whether the acquisition was justified. So without uh, other information we cannot say. So I'll be discussing some other information. So we can see that the aviation industry in 2006-7, so it was a very highly growth industry. The 30% annual growth was also there. So two types of airlines was there. One is low cost carrier, one is full service carrier. And it was dominated by low cost carrier within higher growth. So this is overall growth, whereas the growth of low cost carrier was okay, much higher than the 30% growth. So what was the motive behind the Kingfisher Airlines? I think wanted to be leader. The main motive was wanted to be leader by acquiring the market share. By expanding to low fare segment, keeping own premium band intact. Easier to have international business license for higher experience of the target company. And then to avail synergy through sharing fixed facilities. So these are the basic motive behind this one. But what is the financial condition before the merger? Okay, merger took place in 2007-8. Okay, and before that, the company was incurring losses year after year. Its sales was increasing because there is a high growth industry, but the net profit was negative net profit was increasing. Okay, and you can say that it was eating up the network. So book value per share also getting reduced. Now we can see that what was the amount of debt. So that time also the Kingfisher was a highly indebted company. So 284, 489, 916, 934. So one reason of increasing of this one that if we can see the company was reducing, the company was losing capital. Okay, you can from this book value you can see that company was losing capital due to this huge amount of loss it is incurring. And as a result of that, the company has to take the debt from outside, okay, in different form to keep its business run, okay, run its business, to maintain its business, and to catch the growth bus, okay. So because here their loss was increasing, but that did not prevent them to, as far as the operation is concerned, their operation also they are extending. Okay. So we can see that as a result of that, they had to bear huge amount of interest. Now, one question may come that how come this is so high percentage? Because as the company could not pay the older interest rate, so this is accumulated interest. Okay, so this is not 1 year's interest. So this is accumulated interest plus the interest for this 2007. So what are the risks associated with Kingfisher before merger? So before merger, the company was carrying business. So any business might be having normal businesses. Then price war in aviation industry. There was one paper that was that time it was a highly competitive company, and the pricing of ticket was very competitive. So that was added businesses. So loss making and no sign of turnaround. Okay, so you can see that the loss is increasing or at least not reducing. So that is again added businesses. So already the company is a highly indebted company. So there is a finance risk. So we can understand the company was merged in a high risk uh, profile or high risk proposition. So the company was wanted to take acquire this Air Deccan. So what was the situation of Air Deccan? It is also highly loss-making company. Air Deccan holds 14% market share 2006-7, and it is a loss-making company. Incurred a loss of 341 crore 2005-6. Okay. In fact, almost all the companies during that time was incurring loss. All aviation companies. So incurred a further loss of 418, so 2006-7. So you can understand a loss-making company is going to acquire another loss-making company, and from the book value you can see who's the acquirer does not have any fund. So situation is like this. So is acquisition of Airdecan justified? So here an investment of 960, so two tranches which I have shown earlier. So if we add up this one, so it will be 968 crore for a sale of 40 for a share of 46%. So with sinking net profit, Kingfisher had to finance the merger by borrowing. And in this situation, okay, the company has to take huge loan and company almost fall into the debt trap. So that let us see how it happened. So from 78 to 1213, so debt increased like okay anything. From 934, it became 8,657, and as a result, net profit you can see interest has also increased, and net loss that also increased stupendously from 188 crore and 4,000 to 4,301 crore. So should so in that should Kingfisher Airlines should have gone, okay, should have gone for this acquisition. So here, so what was the consequences? So after the acquisition, so no retained earnings. The company acquired company, that means Kingfisher has no retained earnings. That was first step. So added finance risk. Then acquisition of hello. Just আমি একটু পরে ফোন করছি হ্যাঁ So acquisition of another loss-making company. Uh, there is added finance risk. Okay, then operational and cultural incompatibility. Naturally, two different identities whenever they are coming. So then business is related to merger. So that is very normal for all acquisitions and mergers. So why such disaster? So before acquisition, Kingfisher Airlines itself was assuming huge risk on a standalone basis. Much higher risk after acquisition of loss-making Deccan Aviation by accepting huge risk again. So who is responsible here? So here, who approved such merger at the cost of the interest of the stakeholder? Okay. And who approved the debt financing by loss-making company to acquire another loss-making company by assuming huge debt? So what happened? We all know the company. Okay, the company has collapsed. Okay, and their license was revoked by the ministry, and they had to shut down their business. So this is the situation. So we'll be just raising the issue to see what are the commentaries different literatures are saying regarding this. So now, global financial crisis. Okay, this is the third. First, we have discussed about indebted companies, list of indebted companies. Secondly, we discussed about one mergers, infamous mergers of Kingfishers. And thirdly, global financial crisis. First two was related to the Indian context. So this is related to mostly US context. So here we know that during 2008, so many bank and financial institutions they collapsed like anything. So here you can see that what was their market value, okay, in 2007, and from there what was their market value brought down to 7% of their total market value, which was there at 2007. So here you can see Morgan Stanley, Credit Agricole, Credit Suisse, Deutsche Bank. So all these banking companies has fell into prey into this crisis. So it is not only regarding the one particular issue. The main issue is that the total environment was like that, and the business were interlinked. There is no doubt about that. But at the same time, there are several researches on this one. Okay, and they have conducted study, and they have found that poor corporate governance is one of the reasons. It is not all. Certainly, one of the reasons that which could could not discipline. Okay, the uh, financial aspects of the company, and then scope of financial instability, which leads to scope of financial. So Kirkpatrick, G. Kirkpatrick, in 2009 observed that the financial crisis can be an important extent attributed to failures and weakness in corporate governance arrangement, which did not serve the purpose to safeguard against excessive risk taking. Okay. So here the issue is not only capital structure or financial risk. So overall business risk and overall corporate risk, they what they undertook, mainly the financial institution, what they undertook, that was too high, okay, as found out by Kirkpatrick. And there is another study by Hill 2010. They observed that the well-known victims of financial crisis did not conduct periodic, objective, and comprehensive evaluation with regard to the direction and control of the company. The author further opined that the holistic management and risk management have largely been disregarded on board level of even many large organizations. There are several other papers as well. Okay, so had there been proper corporate governance, it could have been possible. We could have been averted this crisis. Okay, so now what we have seen in discussion so far, we have seen the huge amount of risk the corporates are taken in Indian context and the context mostly in US. However, the debt is certainly important. Okay, debt has its own advantages, but the optimum amount of debt is to be used. Okay. However, if there is a poor governance, then the lower it is possible the company may be unlevered or company may be using or maybe adapting or assuming lower than the optimum level of debt. Okay, so mainly here agency problem creates, okay, this problem. So here we can see that the agency theory, the managerial influence on, as I told, that managerial financing has its own advantages. Now, why this is so? Because according to the agency theory, the managers, they are the agent of the company, so they are more concerned about their personal benefit and gain, and they wanted to make sure about the future financial uh, of the company, uh, even sacrificing minimum amount of risk. Okay, in some cases. So, because on the basis of the profit the company is earning, they'll be getting the remunerations, and also their future will remain stable, okay, in the company if the company also run well. So what they do, these managers, they do not go for taking even the usual amount of risk, okay, or industry level of risk. It is found that there are several papers. It is found that they are taking below optimum level of risk. So Morelak and Nikolov's squad 2012 predicted that manager would opt for lower than optimal level of leverage and be reluctant to rebalance the capital structure in a timely manner. Okay. So in the next slide, you will see that what is the contradiction in objective of shareholder and the managers. So here there is another paper by Liao Mukherjee and Wang 2015. They found that managerial incentive compensation on an average discourage usage of debt. Okay, if there is a variable amount of compensation, then managers want to make sure that no way the company's earning gets reduced by the payment of interest. Okay, so they do not want to go for even usual financial risk, or below normal risk they wanted to undertake. So there is another in this context, there is another paper by Pedro and Gracia, 2016. They observed that if managerial ownership is below 40%, the managerial ownership is aligned with the interest of the shareholder, and leverage is observed to increase as said ownership increases. That means if managerial ownership is more than 40%, so then the leverage is then what is happening, the leverage will be going to come down. So here there is one through diagram. It is going to show the situation. So this is zero debt level. Okay, so if the company has zero debt, this one, and the company has 100% debt and no equity, this is hypothetical certainly. So this will be like this one. Okay, so here this is in between. So now the manager's desired level is up to this one. Managers, because from zero to here, this is there, this one, and shareholders desired level is up to this one. Okay, this one. So what is being seen in most of the cases, the current level of leverage is like this one. Okay, so if the manager's percentage ownership within the board increases, then certainly this will be going to reduce. From here, it will be going to this level. And if shareholders control over the board increases, then from here, this present leverage level or debt equity level, you can say, so it will be moving up here. Okay, so we can see that due to poor corporate governance, either some companies are excessively risky and some companies are maybe the are not assuming even the risk at par, okay, which it should have assumed in normal case. So there are some OECD principles, okay, in corporate governance. So that I'll be, I'm not going to discuss in detail. So this is ensuring the basis on an effective corporate governance framework. So what it says, that it is the duty of the management to ensure that corporate governance, okay, should give should give a framework which will enable to function or different provisions of this corporate governance. This is the first. The secondly, the right of the shareholders and key ownership function. So that is also is to be mentioned. Some guidelines is given in their detailed description. We are not going to discuss that one. The equitable treatment of the shareholders. So minority shareholders should be treated at par with the majority shareholder. The role of stakeholders, that means the other stakeholders like the employees and other like natures, uh, means I'm telling about the surroundings and even the competitors. They are not stakeholder directly, but in some cases it is seen that they might be stakeholder in some cases. So employees, debt holder, creditors, so all these stakeholders, their role is to be predetermined within the company, and that is to be maintained. So the company cannot just delay. One example is like this: the company cannot just delay the payment of creditors, or the cannot delay the salary of the employees for some uncertain period or like this. And fifth, this is disclosure and transparency. So this is very important, disclosure and transparency, because whenever the company will be disclosing about different relevant information, maybe financial and non-financial, so automatically and self-check will come into play. Self-check will come into play, and that will restrict themselves to from preventing some undue activities. The responsibilities of the board. So I have highlighted this one because as far as our today's concern is discussion is concerned, so this is important. So as I told in earlier cases, in case of the merger, in case of the list of the companies, and in case of the global financial crises, so decisions the companies are taken regarding this debt or otherwise, even in case of unlevered firm or low levered firm. Okay, so there, the board will have to take the responsibility to make sure the adequate corporate governance should exist. Okay, so these responsibilities of the board. So here, the corporate governance framework should ensure the strategic guidance of the company, the effective monitoring of management by the board, and the board's accountability to the company and the shareholder. Okay. So here the statement is to some extent philosophical. So as there is a philosophical, so different companies will be uh, assuming this statement or will be considering this statement according to their favor. Okay, some may consider this one as their guidance, and some may just uh, take the written words, okay, not the spirit, and they will be applying this their corporate governance within their company, or they'll be exercising their corporate governance principle within their company. So there is a, as is a philosophical one, so there is a scope like this. So it may be noted that the principle 6 indicates the lapse in the supervision of risk management is the failure of the board of directors of the company. However, the word risk has not been specifically mentioned in the in the responsibility which is there lied in the even detailed principles of the OECD. Detailed principle which is there laid by the OECD, the responsibilities of board they have not uh, specifically mentioned the risk as the one of the very important factors there. And also, what they have done here, they have wrote that the board's accountability to the company and the stakeholders. This way, the principle is very broad, and different companies are using in their favor. Okay, and now, so according to one literature, that is Filatochev and Toms, the board of directors have three decisions to make. Okay, regarding this finance, this the discussion so far we're doing. So how large the asset base need to be? A company cannot think of uh, becoming a very big company in one night, overnight. Okay, so it has to be a measured way. The plan should be a measured way. So so that means the asset base a company is planning or considering cannot be unrealistic one. Okay, as far as the finance is concerned, and how much the company's finance should be in debt. Okay, so if it is fixed one, then certainly due to the lack of financing, it will be difficult for the company for for acquiring new assets. Okay, so there will be one self check by the company. So how much of the profit should be paid out of the dividend? So dividend policy is also related to this debt financing, because there may be some company who may indulge in giving high amount of dividend, at the same time they are resorting to huge amount of debt. So this is certainly prohibitory practices. The company should not accept, should not consider or should not apply. But the thing is that in the context of poor governance, okay, it is very much possible that some companies paying huge amount of dividend, at the same time it is resorting to debt and putting the company at a more risky position. The above three decisions are not only related to company's growth, but also related to risk profile of the company. Okay. So now we understood that one of the very important aspects, that is risk, okay, that is not, or that is overlooked, okay, or not specifically taken care of grossly, or from the broad point of view, it has been considered in corporate governance, but not from the viewpoint of the practicality, that what they should do as far as the risk is concerned. Now, there are four suggestions. This is the end part of my discussion. So there are four suggestions due to the inadequacy of the uh, corporate governance system. So there is a traditional corporate governance model is inadequate in today's complex business environment, and traditional model need to be modified to incorporate risk management. This is the most important observation that I wanted to make in this discussion. So the risk management is the responsibility of board of directors, and it is to be specifically mentioned in the principle of corporate governance. That means only broad outline without specifically mentioning about risk management is not working for all. So there is another paper by Hill 2010, which I have discussed earlier, observed that the well-known victims of the financial crisis did not conduct periodic, objective, and comprehensive evaluation with regard to the direction and control of the company. So these three lines are very important. The company should not await new regulations, but proactively initiate a periodic multidimensional evaluation on the board's performance from the viewpoint of the directors, shareholders, and management. There are another two small suggestions. This is effective monitoring of risk management is not possible without the consideration of risk management. The risk management is an enterprise level issue, so this important issue may not be left towards the hands of the corporate finance department only. So one observation is there. It should not be left towards the corporate finance department only, because it is enterprise level issue, because risk arises not due to finance only, this arises due to so many other factors, and it is to be overseen by the board of directors, that how much risk profile, okay, the company expects, and what is the level, okay, it is at present, where it stands at present. Okay, now the last suggestion, this is the audit committees are traditionally responsible to report on company's financial system, which should also include risk management in order to be able to assess overall risk profile of the company. So all the companies, they almost mandatorily maintain this audit committee. Okay, so this audit committee should be objective, and here the independent persons should also be incorporated, and higher the amount of external members, better objectivity and transparency we expect from this audit committee. And this should also look into the risk management aspect of the company to be able to assess overall risk profile of the company. So now this is the reference, and thank you everyone for your patient hearing. So thank you very much. I've finished almost in time. Then okay. So if there is any question from the audience, then certainly I can try to answer those ones.
Yes, sir.
Please.
There is one question
Sure,
from one of our participants,
sure.
Amita. She is telling. Sir, is there any rules regarding who will be the part of committee for corporate governance? It is correct that board corporate governance, but as we have seen in today's session, actually Indranil sir provided a session on HR and finance,
Sure.
and also other departments are important for corporate governance. So there should be any rules regarding expert from every important department who will form part of corporate governance committee.
Actually, there is no hard and fast rule that way. There is no hard and fast rule. This is broadly, the guideline says that the higher the number of independent director, better it is. Higher the gender diversity the board is maintaining, that is welcome. Okay, and also the size should be adequate. It may not be very large, but it should not be the very minimum number. Okay, but the most important thing is that, so even laws cannot do anything if we do not follow the spirit or we do not abide by the spirit. So even if we maintain, if we maintain on the paper, the independent director may not work, okay, as per their conscience. Okay. So naturally, they will have to be directed some way or other by either by the management or by the other members of the board. Okay. So the scope is there, still there, and so we can see that it is not legislation. I can say regulation is there, but legislation is not there. That how far we can ensure, okay, so that we can ensure the independency of the board of directors and objectivity, and also could ensure the interest of all the stakeholders. Okay, so there are several suggestions. Like one suggestions could be like this. So one suggestion could be like this. Suppose already corporate governance says about that who will be the stakeholders, that we know also. The, apart from the shareholders, the employees, the creditors, the debt holders, and also the society members, okay, surrounding society. So they are the stakeholders. Now, how the stakeholders' interest could be protected? So their interest could be protected like this: if board of directors would choose a pool of people who could be probable directors. So among those, if these stakeholders decide who will be overseeing their interest, okay. Suppose employees will be deciding who will be their director from the pool of the probable director fixed by the board of directors. Okay. So this way, the creditor will also be deciding this way, and another person will also be deciding that way. That means the society, outside society, they also be selecting some directors on the basis of on the basis of the pool. So first interest certainly will be the interest of the company, okay, overall. But certainly the secondary objective of that director will be to protect the interest of that particular section. Okay, it may be employee, it may be the shareholders. Interest is already being taken care of. Okay, so it may be the employee, it may be the creditors, or maybe the others, or the okay, for the external society. So this way we could improve the board composition, but till now the company will have to take proactive incidents, uh, proactive actions. Otherwise, it is not possible at the moment to impose this one, because without the lack of legislation, so there is certainly there is a scope the company can may not follow, okay, all these principles of governance, in true spirit. Okay, they may follow, okay, in words, okay, but they may not follow in true spirit. So if the company does not follow true spirits, then certainly the purpose of corporate governance will not be achieved. Okay. So
Okay,
this
and
is the sure.
yes, sir. And Mamta ma'am is also adding that
Please.
can we say that current year's corporate governance is still in its infancy stage, as there are not much in legislation regarding it?
Sure, sure, sure. See, one thing is that one thing we can say that corporate governance, in one sense, the ethical, uh, it is trying to create an ethical environment of the company. Okay, so as we know that ethics differs from person to person, and it is not bound by any legislation for individual. Similarly, the corporate governance till date, it is not under framed up under any legislation that way, or that strict way. I can say there is legislation, there is rules, but it is not so hard and fast or so rigid that the objectivity or independence and the transparency could be ensured. So certainly, it is at the infancy stage, okay, in India
Yes, sir.
and many developing countries.
Also, sir, because of this COVID, there is no change in the legislation. Because of this COVID, many organizations are facing different kind of. Specifically, we are entering into digital world. Yesterday, we had a talk on fintech. So,
Okay.
all of us are using this finance plus technology kind of an industry, and
Sure.
then there is no governance to it. So that is also the
Yes.
problem.
In fact, there is one very important literature. So how this risk is emerging. So in this complex world, I have mentioned in my presentation that in the complex world, especially in this technologically developed and technologically driven, so many financial instrument has also came up. There is interest swap, there is derivative, there is, okay, there is cross merger uh, incidents, and so many things. So to assess the risk, so it is the job one expertise. So what is happening? Many of the board, they lack this expertise. Okay, so even if the board of directors has the intention to follow the corporate principle of corporate governance, but they may not be able because they lack the expertise, because they could not understand from where the risk is assuming. Even if they understand that one, they cannot assess the total amount of risk the company is bearing. So as a result of that, what is happening? So the company, the board of directors, even if they wish to follow the corporate governance, they wanted to maintain the risk at low level, okay, that could not be achieved. Okay, and finally, it is possible that company may fall in trouble, okay, or even make disaster. Okay. So here in corporate governance, it is said that the the board of directors should not only be honest, transparent, but they should also be expert, okay, in their field, and especially the provisions what the corporate governance requires. So as I told, in case of other issues, many may be from their common sense and from their understanding could understand that what will be the level of good quality of corporate governance. But as far as the risk is concerned and overall risk is concerned, it is difficult for the company or any novice person, okay, to understand what are the level of risk the company is assuming and present, and how to manage those risks, and what are the risks that is foreseen in future, and how to tackle those or how to manage those. So for this reason, the board of directors should not only be independent, they should also be expert enough. At least one or two members, some member should be expert enough to handle such situations. Okay, so this is my submission.
Yes, sure. So another question from Professor Shanti Kiran. He's asking, is there any regulations related to corporate governance that should be followed by companies during mergers and acquisitions, or it is only the responsibility of the board?
Whatever my knowledge is concerned, I think that there is no such separate corporate governance issues. So whatever the broad guidelines that government has given, okay, the company has to prepare one corporate governance report, okay, which has to be certified. So there broadly the things are mentioned, okay. But the thing is that each and every aspect and fine tunes, uh, finer issues which arises for adopting a good corporate governance, that is not there. And it is not there, and I think from the viewpoint of the corporate world, it may not be desired also, and government also think like that, because if lot of regulations the government put, then the flexibility and freedom of the companies will be uh, will be in a problem. And one thing is that the these problems, this corporate governance. Okay, suppose I am talking about the issue of risk. So risk is different for different industry. Okay, and within the industry, then the risk profile of different company is different. So how government can frame one blanket rule for all the company? So if government does that, then certainly corporate governance may be maintained. But the issue is that the flexibility and the freedom of the companies will go off. And if it is go off, then certainly it will harm their growth, corporate growth, and also economic growth, okay, of the country. So this is my.
Yes, sir. Thank you so
Sir,
much,
you are
sir.
not visible. If you can stop screen sharing, then you will be visible.
Oh, acha. Just a minute.
Thank you so much, sir. Um, we cannot see you, sir. So you're not visible.
Maybe some net issue or technical problem. No, now sir is
Yes.
visible.
Now,
Yes.
yes, sir. Thank you so much, sir, for patiently answering all the questions. And thank you, sincere thanks to you for accepting our proposal. Uh, thank you so much, sir. Thank you for the participants for asking valuable questions to sir as well. Thank you from our part.
Thank you.
Thank you to Dr. Kalpataru Bandopadhyay, Professor of Vidyasagar University, for enlightening us on corporate governance and financial strategy. I'm sure participants have benefited from attending the program. Thank you, sir. And I'm
Sir,
happy
please
to extend
unmute
my
yourself.
sincere thanks.
Thank you very much for inviting me and also giving this opportunity. I'm very happy. Okay. However, I could not understand that how far I could communicated to you, because this is a one-way almost communication. Okay. Had it been
Yes, no,
physical
sir,
mode, we could
wonderfully
have
explained.
understood. Okay.
Definitely, sir.
Sure,
Yes,
sure. It is always for all of us. So
it
anyway,
was very
thank you very much.
enlightening, sir.
Sure, sure,
Thank
Very
you, sir.
informative, sir. Thank you, sir. Thanks,
sure,
ma'am.
sure, sure. Thank you very much. Okay. So
Thank you.
should I leave?
Yes, sir,
Sure,
you can leave now.
sure, sure. Thank you.
I'm happy to extend my sincere thanks to respected head of the institution, Professor Dr. Kiya Das Ghosh, my dear colleagues, and all those who have helped to make the program a grand success. I once again thank
Anandi ma'am, you are
everyone
not
who.
visible. Anandi ma'am, you are not visible.
Okay, but my camera is on. Don't know why.
Maybe
Am
some
I visible,
technical
ma'am?
problem. Yes, yes, you are visible now.
Okay,
Are you,
so
sir, please share the evaluation sheet 3.
Yes, ma'am, just doing.
yes, sir.
Hmm. And the
I once again
PPTs
thank
also.
everyone. Yes, ma'am. So, PPTs and evaluation link, many participants are asking. You will be getting in the chat box. And thank you for your question answer session. Please be participative. I'm sure you will gain a lot from the faculty development program. So you will. So this is a reminder to you all that the assessment test link will be posted, and the PowerPoint presentations will be posted, and the assessment link will be valid for 1 hour, and then it will automatically become deactivated. Also, please log in with your registered ID, which you have been used while registering for this faculty development program, for filling up evaluations, for feedback forms, for receiving your e-certificate without any problem. Also, just a brief of tomorrow's session, that is on 30th July 2021. Our session will be starting from 11 a.m. and we would request you to join at 10:45 as the scheduled time. And tomorrow again there will be two sessions. One will be handled by Dr. Debarshi Mukherjee, Associate Professor and Head of Tripura University. He will be discussing about corporate governance issues in emerging markets. And another will be by Dr. Parak Sheel. He is the professor and head of the department of Assam University, and he will be enlightening us upon transparency and corporate governance. Once again, thank you one and all present here. With the parting thought, the scheduled time, that is at 10:45 a.m. Thank you everyone. Have a nice day.
Respected participant, please wait for a few minutes regarding your evaluation link and PPT. Please wait. Are you, sir? You're not ready with the link?
Ma'am, it's having some problem. Just give me a minute. I'll be uploading it right now. Ma'am, हो गया बस.
Okay.
Okay.
Yes, dear participants, now you can use your microphone for if you have any query. Doc- Dr.
Dr.
Anushri,
Anushri Malik.
yes, you are allowed to unmute yourself.
Unmuted. Yes, ma'am.
Good evening, ma'am. Sorry, good afternoon, ma'am.
Good afternoon, ma'am.
This is Shanti. Ma'am, I requested for Dr. Indranil Bosa's mail ID, ma'am. Can we have it, please?
Actually, I will share it at the end of the program.
Okay, ma'am.
Today I'll share it. Okay.
Okay.
Yes, Dr. Anushree Malik, do you have any query? Madam Dr. Anushree Malik. Dear participants, now you can unmute yourself. Be enabled your microphone.
Good afternoon, ma'am.
Yes.
I'm Mrs. Mary Vinay Sheila from St. Joseph's College. My colleague, Mr. Krishnamurthy, is also attending this course. Maybe his mic has some problem.
Yes.
He will respond to you through his WhatsApp.
Okay. Okay. Please tell him to join from his registered
Ma'am,
ID.
the link
Nothing
has been
else.
shared.
Okay.
Oh,
And you
oh.
share the 2 PPT also, sir.
Okay, ma'am.
And also you share this link in the WhatsApp group as well. Thank you, sir.
Okay, ma'am. Okay, ma'am.
Dear participants, the link has already been shared in the chat box, and within a few moments it will also be shared in the WhatsApp group.
Now it is 1:21 till 2:30. The link will open. So please follow the rules and regulations and fill it up.
Any more queries from your side, dear participants?
Yourself.
Hello.
Problem form is not showing properly. Yes, yes, sir. You are audible.
Sir,
Yes, sir.
लिंक तो मैंने दे दिया.
मैडम
There are.
हाँ सर.
Yes, yes, sir. Please.
सर,
मैडम
I think वो
एक्चुअली
1-2 मिनट लेगा just to activate.
I said, please mute yourself. Somebody is asking some question.
मैडम एक्चुअली I cannot see the chat because it's written that chat in channel meeting is only available to team members.
Sir, you are entering into this discussion through your mobile or through laptop?
Through my laptop, but I don't have separate application for that.
Please download MS Team, then it will be easier for you. Okay, then the chat box will also open, not from the link. You just download MS Team and then go through the link. Okay, I think it will be much easier for you, sir. Otherwise,
Madam,
at the
can we give
MS
the
Team
evaluation feedback form in the WhatsApp group?
feedback
Yes.
form, yes, definitely, but on Saturday only.
Okay, madam.
So
Okay.
today's this assessment form will be definitely shared in your WhatsApp group as well. Just wait for a
I
moment.
think some problem is there in the assessment form because one madam is asking that a form is showing it is not accepting responses. This is what coming. Okay, I'll check.
Ma'am, it will activate in 2-3 minutes.
Okay, and you share the PPT, please.
Ma'am,
Quickly
I
share
have
the
already shared. I'm already shared.
in the chat box.
Yes, ma'am.
मैम चैट बॉक्स में शो नहीं हो रहा है लिंक.
No, it's not in the chat.
मैम सॉरी व्हाट्सएप चैट में शो नहीं हो रहा है.
Just a minute, ma'am. Give us 2-3 minutes. We'll definitely do it. But
Sure.
Ayush sir, in case of my chat box, the 2 PPTs are not visible. I don't know why. Millie ma'am, is this visible in chat box?
Just a minute, ma'am.
Yes, now it is visible. Now it is visible in chat box.
Yes.
So respected participants, both the session PPT we have uploaded in chat box and you can download it now. And the form is also visible and we'll be sharing within a minute through WhatsApp also.
Ma'am.
Yes, good afternoon.
Ma'am, it's still not visible in the chat box. Neither the link nor the PPTs, ma'am.
Yes, actually, maybe you have some net issue. So just wait for 2-3 minutes. Definitely it will be visible because it is visible for others. Okay. Please wait. I think you have some network issues.
Ayush sir, kindly share the link in the WhatsApp group as well, sir.
No, with there are some issues with the link. Please check it. While setting the link, some in settings, something wrong has happened.
Why, sir? It's not taking responses.
No. Responses. It's showing that the form assessment 3 faculty development program is no longer accepting response. I think in setting the time there might be some issues. In setting the time, response time.
Okay, sir. We'll check it.
So that's why it is showing that it no longer accepting the response. So you have to extend the time, I think.
Okay, just give us a minute, just give us a moment. Let us check and confirm.
I did one more FDP before this one with Amity, but I have not received certificate of that FDP also. I think again in that FDP also might be some issues with the response and attendance and all. I had given all the responses every day, every session, but I have not received the certificate.
So, sir, you are requested to contact with that concerned department. Okay, sir.
Ma'am, good afternoon, ma'am.
Respected all. Within 5 minutes, the link will be working. Just we have to change something, so just wait for 5 minutes. It will work properly. Okay.
Okay.
And we'll extend the time also. It's not 2:30 until 2:45. It will open. Please wait. Within a few minutes, it will work. Yes, ma'am. If you have any other question.
Hello.
Yes, sir.
Hello. Myself, Dr. Shankarpan from Hooghly Motion College.
Yes, sir.
Actually, the chat box in my I'm showing the deliberations from my mobile phone. Actually, the chat box is not shown. So every time in the it's raise your hand and put me hold option is given, but chat box option is not shown. So how can I access it? Because every time I was a question, but I couldn't
Ma'am,
ask the
same
question.
problem with me also. I'm not able to see chat box in the mobile screen.
Okay, I'll just tell you. Maybe there's a problem of 50% of the respected participants. What you need to do, you need to download the MS Team app. Download the MS Team app. Otherwise, you cannot access your chat box. Those who have downloaded the app and joining through the link, they can easily access in the chat box. 2 more days are left. So this is our advice. Please download it. Then it will be easier for you.
No, I have already downloaded it. I have already downloaded it, but in spite of that, I couldn't find the chat box.
Yes, ma'am. Actually, we already downloaded the Microsoft Teams. And we are also logging through the same mail ID which we have registered, but still we are unable to access to the chats. And the chats are not visible to us also, ma'am.
Okay, one thing I'll share you a YouTube link that after downloading the MS Team, how to open the chat box. Okay, I think it will be easier for you then. Okay, I'm sharing it in the WhatsApp link. Please try through that. Okay.
And we did not receive the assessment forms still, ma'am.
In assessment form in WhatsApp.
Yeah, ma'am, in WhatsApp.
Because yes, we'll be sharing.
Just wait for a moment, ma'am.
Yeah.
And moreover, even if you have any query, you may click that hand raise option. Okay, so that at the end, during the end of the session, we may allow you to speak. Okay, ma'am.
Definitely, we'll share the link on WhatsApp. Give us 5 minutes.
And the form is active now. I'll be sharing the link on the WhatsApp group.
Please do it.
Yes, ma'am.
Respected participant, please check from your end. If there is any problem, we are still waiting here. Please share with us.
Yes, it is verified. Now it's working. The link is working. Dear participants, now the link is working. It is verified.
Ma'am, I have shared the link on the WhatsApp group also.
Okay. So please check. I have shared the YouTube video also how to open the chat box. I hope it will be helpful, and the link is also given.